these presentations of Skanska's Q1 report. It has been an interesting week for Skanska, so we will have here a presentation of the Q1 report. It will also be webcasted and possible to attend via the telephone conference. There will be possibilities for questions afterwards, and we will start with questions from the audience here in Stockholm. And after that, we take questions from the telephone and the web attendance people. And this Q1 report will be presented of our CEO, Johan Karlström, and our CFO, Hans Björk. So Johan, welcome.
Thanks, Pontus, and good morning, everybody. Good to see you here. So I will start, and then I will going to hand over to Hans a little bit later on, as we used to do in our presentations. The presentation that we're gonna that we will present for you here today, and all the comments that will be according to the segment reporting, and because that's the way that we follow our business. If you look at the revenue for the group, it's 25.8 billion compared to 30 billion the first quarter last year. And in construction, you can see that the revenues, they are down 17% in local currencies. 4% of the 17% can be explained by the severe winter. Of course, we always have in our plan a normal winter, but the 4% is like, you can call it some extra winter impact. The operating margin in construction is 2.4%, which is the same as the first quarter last year, which means that the operating margin is holding up quite well. And you can also see that the operating cash flow in the business were positive 1 billion in the first quarter, and it always used to be an outflow in the first quarter, as we usually have a very strong cash flow in the last quarter. But this time it's actually positive inflow of cash, and we will come back to that and explain a little bit deeper the details around it. Which means that we ended up the quarter with a very strong net cash position of 8.8 billion. The order bookings increased by 6% in Swedish currency, and in the local currencies, if we translate it over to that, it's a 15% up. So we can see here there is a little bit of a trend shift. And if you look at the book-to-bill or book-to-build, which we can call it in our industry, it's 106% on a rolling 12 basis compared to 77%. So you can definitely see that it's a big change here. And we are ending up with the 13 months backlog. The operating income was definitely better in the quarter, and was up to 0.9 billion Swedish, and it's primarily coming from better results in the development businesses. We can see positive contribution from all streams there, residential development, commercial development, and infrastructure development. And we managed to sell, despite the weak transaction market, we managed to sell several products in commercial development. And we also sold a motorway or a highway in Norway during the quarter in infrastructure development. So that is the contribution there. Moving over to construction, it's a little bit of a mixed picture. We have the earnings. It is both the winter impact, which took down the revenue somewhat, and it has also some impact on the productivity. But on the other hand, we can see that even this quarter, we can add it to several quarters now, that we have new major write-downs coming from the whole portfolio project, which shows one more time that the risk management that we're working very hard on in the company is continuing to pay off and have a huge impact on the bottom line. And this will definitely be something that we will continue on. Cash flow, as I talked about, was very strong in the stream, and the book-to-bill was 106%. We can now see a trend shift, and that is primarily in the Nordics, and especially in Sweden, if you talk about order intake. And in the first quarter, and if we continue and take a glance and look into the second quarter, I'm sure that you have seen that we have announced several projects actually this week. It has been a record week for Skanska. And the big project there is of course, the new hospital, the Nya Karolinska in Solna, 14.5 billion. It is the largest project ever that Skanska have landed. It is we are preferred bidder there, and we expect the financial close to take place during the second quarter. In that project, we also are an investor with the infrastructure development side, so we will invest 650 million together with our partner Industry, and we have a 50-50 basis there. The day after, we were awarded the project, the Congress and Conference Center, and together with a hotel down in Malmö, and that was 1.4 billion, and we will also be an investor there as well. So we will invest 900 million. 200 of the 9 million, that is that we will buy building rights for residential and commercial use for the future. And on top of that, we reached financial close on a highway in Chile, north of Santiago, called the Antofagasta Highway, 1.8 billion, and we will also be an investor there with around 700 million Swedish. And also we landed a school program in UK, which is also a combination of investment of Skanska on the infrastructure development side and an order intake of around 700 million Swedish. During the week, we have announced close to 19 billion in order intake. Quite a lot. And one thing that which is important to know here is that 18.5 of the 19 that we have announced, that is project where we are both an investor and also a contractor. And that is the strength of Skanska that you can see here. And that is what we are now trying to really push forward and use the balance sheet and the financial strength, where we are using the knowledge from several business units, from several countries, like the Karolinska Hospital. We have people from UK that we are part of the organization, but we are also involved in the project where we are involved with as an investor. And that is the unique thing with Skanska compared to several of our competitors. And that's definitely something that we will continue to work on, and I see that as a competitive advantage for us. Moving forward into residential development, we see we could start quite a lot of projects during the quarter. It was 952 homes that we actually started during the quarter, compared to around 150 first quarter 2009. And we can also see positive earnings in all the markets that we now operate in. The focus now for us, that is to push hard on all the projects that we have in the pipeline, to get the permits, to reach the design stage, so we can go to the market and open up for sales. And once we have reached The pre-sale hurdle that we used to have, which is around 40%, differs somewhat between the various market. Then, of course, we start the project. And we see good opportunities to continue to start more projects on the residential development side. In Czech and Slovakia, where we have residential development as well, it's a somewhat weaker market, but in some locations, we also see opportunities to start projects there as well. Moving over to commercial development, we divested properties for 1.5 billion with a gain of a little bit more than 200 in the quarter. But we could also see opportunities to start new projects. There is quite high vacancy rates in, I would say, all the markets that we operate in. But there is, even if it's a high vacancy rate, there is a demand for modern new offices which has a green aspect and are energy efficient. So even if there is vacancies in the old stock, we see opportunities now for our products. And therefore, we have started projects, and we see opportunities even forward here for new startups. And we see also increased interest from investors. And finally, infrastructure development. Talked about the new Karolinska Hospital in Solna, financial close in the Essex School program in UK, and the Antofagasta highway in Chile. We are continuing to work on the divestment process of Autopista Central in Santiago, and we still have exactly the same view. It's time for us, to divest and to move forward here. But the earthquake in Chile and in Santiago has impacted, the society and the economy. And now we need to understand exactly what the impact and the implications will be for the market. If we will sell it 2010 and 11, I can't really tell, but that is not important for us. The most important thing, that is, to get the best value for the highway. So, if we sum it up a little bit and look at the order bookings in construction, and the two most important lines in the graphs here that you should take a look at, that is the rolling 12 and the of revenue, and the rolling 12 of order intake. And you can see now on the graph that the rolling 12 of order intake have now passed the rolling 12 of revenue. The low revenue that we have here, the lower revenue, that is coming from weak order intake and lower order intake in 2008 and 2009. We have roughly around 1 year's lag time from an order intake until it really kicks in on the revenue side. So you can see how it's actually changing here. At the end of the year, the book-to-bill was around 100%. I think it was 99%, and now it's 106%. And you can see the difference between and the gap between the two curves here, which means that it's sending a positive signs for the future. If you look at the breakdown of the construction unit that you can see here on this slide, you can see that we have quite a good order situation in most of the markets, and especially in Poland, and that is coming from big orders on the infrastructure side, and in USA Civil and in UK as well. We have very long projects in all these markets. 13 months of order backlog on average in the portfolio. So with that, I'm gonna hand over to Hans Björk.
Thank you, Johan. Okay. Some more numbers, and just to repeat for those of you that haven't observed, We have our own definition of segment reporting, which means for residential development and commercial development, we recognize revenue and gross margin, gross income, when we sign a sales agreement, not when we deliver properties. So, starting with construction, where segment and IFRS is the same. Revenues significantly down, 24% year-on-year. Out of that 24%, 7% is the impact of currencies, and primarily the dollar. If so, we have 17 on a currency-adjusted basis. We reckon that the winter effect was something like 4%. We had a number of projects which were delayed in the startup or much lower productivity. So if we adjust for that, we are down to something like 13% of total work in construction. We did less work this first quarter this year for our own residential and commercial development streams. So if we adjust for that, you can say the external work was down 10% and the total work was down 30%. If we look at the margins for the first quarter, gross margin was up, partly mix and partly also a very good execution. Nothing falling off a cliff in the first quarter in terms of project execution. Selling and admin are coming down in absolute term and in relative or down 16% on prior year. But of course, we couldn't match a 24% decline. But over the year, I'm sure that we will be able to sort of come back to decent margin or to selling and admin expenses as percent of revenue. Operating margin 2.4%, the same as last year. On the currency going forward, you can say that if we assume that the exchange rate that were on the 31st of March would prevail for the rest of the year, we would have about 4% negative currency impact on the revenue for the full year. But 31st of March right now seems like a long way ago. We can say we had a cross rate for the Swedish krona at 7.21 on the last day of March, and today we have 7.70. And the dollar is 40% of revenues for us, so it can move or reduce this negative impact quite a bit. If we look at the income side, total income is down by 168 million year on year, and there are some countries which are worth sort of commenting upon. Sweden is down by about half, and that's partly because of lower volume. Sweden is down 24% in revenues year on year. But it's also impacted by very sort of not insignificant bidding cost for NKS that we didn't have in the first quarter of 2009. If I just adjust for the NKS, we would do 2.6% or slightly more in the first quarter of this year. Norway is distorted by the fact that we had a gain from curtailment of our pension plan of around 100 million that has impacted Norway. I would say the winter effect is sprinkled almost everywhere except Latin America and USA building. All other business units have been impacted. And you can see USA Civil is still showing a very, very strong performance at 6.9%. We go into the residential. Good start of the year. Revenues are up 21%. That's a reflection of good sales. The 1.6 billion therefore represent exactly the homes that we sold in the quarter. And as you can see, the gross margin is coming up 14%. We are getting into sort of some decent territory now, reflecting, I would say, good market conditions. Last year we had only 6% as a reflection of very tough conditions in the early part of 2009. We had to give rebates in order to sell projects or homes. S&A costs are coming down to 8% of revenue. Still not exactly where we'd like to have them, but sort of getting into the right ballpark, giving us an operating income of 6% in the first quarter. Quite happy about that. If we look at the income for each market, last year we made loss in each market in the first quarter. This year we now make profits everywhere. And as you can see in Denmark, we have closed down our residential operation, so there will be no further activities going forward. If we look at the number of homes under construction, we're up something like 300 from the end of December, and most of that is in the Nordic markets. The percentage sold is coming down as a reflection of that we now start more projects than we sell. So that's, for us, it's a reasonably good trend, because we are happy with that as long as they don't show up as completed unsold. And you can see the total number of completed unsold in the Nordic countries is coming down to a very low level. In Czech Republic, they are slightly higher than we are comfortable with, and that will hold back new starts as we progress until we have sort of taken that number down a bit. If you look at the numbers of homes that we started, it was very close to 1,000, of which 800 in the Nordic market in the first quarter. And that's sort of, you can hardly compare it to the first quarter of 2009 when we didn't start anything more than one project in Sweden. But still, on a rolling 12-month basis, you can see that we started about 1,600 homes. And on a rolling 12-month basis, we have sold 2,600. So you should expect that we will continue to ramp up project starts to a higher degree than sales as we go through the year. Despite the fact that sales in the first quarter is also above last year, and we're doing close to 700 homes in the first quarter. This graph of unsold homes, and we can say we are now in a level where we would be comfortable to have around 1,500 to 2,000 homes that are not sold. We would like to have the bar as blue as possible. Green are completed, and that's really where you could have some risk, because if the green bar would increase, it might indicate that you have the wrong price or the wrong product or in the wrong place. But the blue one is the inventory that we need to sell. So that's going in the right direction. Going over to the commercial development part, the first quarter was impacted very much by the sale of a couple of properties. Out of the revenues, 1.6 is the sales value of properties sold in the first quarter. And as you can see, 219 million of the income is coming from the sale of these properties as well, which means that the underlying business, the rental income, still is a bit higher than our overhead cost and project management cost here. And as I said, we sold for 1.6 billion, generating a gain of 219. That's as a proportion to sales value, a slightly lower figure than what we have reported in the past. And I would say there are two explanations for it. One, the first property mentioned here, Klassföreståndaren Norra Bantorget, there we bought the land during the second half of 2009 for around 220 million crowns. And there is no real uplift on that. We bought it at market price, and it's included at market price. But we also have to admit that Bylingen, Stockholm was a project that we didn't make much money on. We started with a bit of expensive land, and we had one or two problems in the project in production cost. So hopefully going forward, we would return to more normal profit levels. If we look at the portfolio today, we have in the balance sheet at the end of March, 11.7 billion of commercial properties. And we estimate that we will have a book value upon completion here at 13.8. So there's further 2.1 billion of additional investments in the ongoing projects. And those projects we assess will have a market value upon completion of 17.1, which means there were 3.3 billion or so of profits to come in the IFRS segment. If you look at the 17.1, 2.6 of that is essentially sold properties. Properties that will be delivered, 60% of that will be delivered in the second half of this year, and the remaining 40% in the first quarter of next year. We started 4 new projects in the first quarter, one in Gothenburg, one in Malmö, one in Washington, D.C., our first project in the U.S., and one in Poland. All in about 1.2 billion of investment cost. The biggest piece here is the Washington property, slightly above 600 million, which we started without any tenants, but it looks promising. We have, since the end of March, started a further 3 or 4, depending on how you define it, projects with a total investment value of 1.3 billion. All projects fully leased. Infrastructure development, Now we're showing the right color of the numbers here. We're making money. And in the first quarter, there's 97 million of gain from the sale of our 50% of a motorway in Norway. Adjusted for that, we would have an operating income around 50 million, which is the run rate right now without any sales. We look at the portfolio. We have a present value of the cash flow from projects at 11.2 billion. Out of that, Autopista accounts for about 70%. We have present value of remaining investments, principally the M25 in the UK and A1 in Poland of 900 million. And we have carrying amount or book value of 2.1, giving us an unrealized development gain with these assumptions of 8.2 billion. And out of the book value, we can say just about half is the book value for Autopista. We look at the change in net present value. We started the year with 10.5. The de-risk, i.e. the impact of coming closer to the cash flow, generated a value increase of 300 million. Net investments, negative 100 million, which means that we actually were paid back from our projects about 100 million during the quarter. And then we had the negative impact of exchange rate, and it was primarily the strengthening of the Swedish krona during the first quarter that knocked out 400 million. If we look at the income statement taken together, just spoken about the operating income from the 4 business streams at 1.1 billion. Central cost and eliminations, more or less the same numbers as last year. Then you can see the financial items are now showing up with the right numbers. We are positive 16 million compared with negative 77 last year. And I hope that we can keep that color of the numbers going forward in the year as well. Tax rate of 28% gives us a net profit of 674 or 1 krona 63 öre to start the year with. Quite a bit of improvement from last year. If we look at the balance sheet, you can see total assets are coming down, partly because we sold properties, both residential and commercial, but also as a function of the Swedish krona strengthening in the period. Equity up marginally. And then we can say interest-bearing net receivables, or what we normally say net cash, up 700 million from year-end to 8.8 billion. That includes, as a net liability, the construction credits that we have in the co-ops in Sweden and Finland of approximately 1.9 billion. We had 2.5 at the end of December, and it's lower in end of March because we have completed a number of co-ops during the first quarter. The graph of working capital, once again, I think we had done a fairly decent job here. As you know, this is the working capital in construction. The first and second quarter, we normally have outflows, and one would expect very significant outflows given that the business is contracting right now. Despite this, the outflow is very marginal. It's really just exchange rate here. And you can see the yellow line, which measures the average, what we call working capital ratio, measured over 5 quarters, is still moving in the right direction, and we're now at something like negative 15%. Look, some change in equity. We started at 20.2 and closed at 20.8. It is essentially all coming from profits. No other major thing impacting the equity in the quarter. And on the cash flow, couple of things here. You can say change in working capital looks like almost the same number as last year, but within that, it's sort of 2 big variations. Within the construction stream, we actually generated 200 million compared with an outflow last year of 1.7 billion. Remarkable sort of performance. And partly driven by the fact that some of the large projects that we got in USA Civil during Q4 generated upfront cash in Q1 this year. But we also generated cash in Latin America for the first time for a while, so that helped. We had, on the other hand, the residential business consumed 900 million of working capital in the first quarter as we closed out a number of co-ops. One thing to notice also is the net investments here is a big change from last year. We have the net divestments here generating 1.5 billion as a result of the sale of the commercial properties. All in all, an improvement last year versus last year of 2.2 billion. And here is the result then on the change in the net cash. started at 8.1. Cash flow generated 300 million, covered by the last picture. Some translation differences generating a further 100 million. And then change in pension liability. We did a fairly good job in the first quarter of the year. We generated on average 4.1% return on the assets in our pension funds that reduced the pension liability with 200 million, allowing us to finish the quarter at 8.8. Johan?
So, moving over to the market outlook, we can now see that there is an early signs of recovery, especially in the Nordic market, and that is, basically the change if you compare, our market outlook this time compared to one quarter back. If you look at which part of the market where we have a stable outlook, and that is the larger civil projects across all the geographies, across all the business units that we operate in, and especially it's the same in the public segment as well. Residential in the Nordics, as I said before, we have a positive outlook, and we see that there will continue with a positive side as long as we can forecast. Weak part of the market, or if you talk about clients, is the private side. Private clients, private developers for new offices, still a very weak part. And we also see a weak outlook for Czech Republic, Slovakia. And I think that we have to be cautious regarding the market in UK. We expect that it will be cut in the public spendings going forward. All in all, we now forecast that the revenue will go down by somewhat more than 5% in 2010, and it's coming from lower order intake in 2008 and 2009, and it also includes the severe winter impact in the first quarter. Moving over to residential development. We can see that it's all positive in all the markets that we operate in: Finland, Sweden, Norway, somewhat weaker in Czech Republic and Slovakia. I think, though, that it is important that we follow the unemployment rates, the confidence in the market among consumers and potential buyers, and of course, how the interest rate will go. But in general, we believe it's a positive market going forward. Commercial development, basically the same situation as we have presented the last quarter here. Increased interest from investors. We can see that the transactions are coming up and is being more and more in the market. Even if there is vacancy rates in all the cities, which is quite high in all the cities where we operate in, we see a demand for good locations, new offices with energy efficient buildings. The yields have stabilized, and we can see a pressure on the rent levels in general. Fantastic picture, isn't it? That is the hospital in Solna that you see in the background there. And we can still see a healthy pipeline of projects in the PPP, on the PPP side, especially in UK. And we expect that will continue, even if it's shifting over to other markets, other sectors, I would say, from the healthcare side more over to street lighting and utilities part of the market. We see also the waste to energy as an interesting sector there. Increasing interest in other countries and outside UK for PPP solutions. And I think that, with the new Karolinska, that has been, I would say, the first project here in Sweden on the building side, and I think it will open up for new discussions in other projects here as well. There is a potential for PPP projects in the US, and it's a long way to go, but we have projects in the pipeline. So, If we summarize, what's going to be the focus for us going forward? We are preparing ourselves for an increase in volume. It's going to take some time before the trend shift and the better order intake that we have seen in the first quarter and the beginning of the second quarter will kick in. As I said earlier, it's a little bit of, we have around 12 months lag time before order intake that we see that it's coming to revenue. But we have to be prepared for that later this year and 2011. Of course, project execution and risk management still going to be in focus because we know that really have a huge impact on the operating margin in construction. We will continue to start new project in residential development and in commercial development. We see good opportunities for our products in those sectors. And the green aspect, we're working very hard on that. We have a special function which is called Green Business Officer now that is now helping and supporting the various units in several of our markets to coming out with a concept that we can offer the market which we think will be interesting for the future. And of course, once we have filled the project with tenants and then it will be time to divest them and see the result of the investments. So with that, I will end the presentation here, and Pontus, maybe we should open up for
Questions.
some questions.
Yes. Welcome with questions, and we start here with the people here in Stockholm. And yes, Niklas Höglund.
Okay, Niklas Höglund, Swedbank. A couple of questions, if I may. If we first start with the outlook, you have a 17% decline organically, and you're talking about improving tendering activity, and you have a weak winter. Is that the right word? Probably not. Should this quarter be seen as the bottom in the cycle in terms of growth or decline for Skanska?
It's hard to see, but our general view is that especially in the Nordics that we can see a shift here if you talk about order intake. The second quarter, as you knew, has started up quite well, and we see good opportunities going forward here. It's a little bit, I would say the trend shift is more we can see it more here in the Nordics than in the other markets. I'm a little bit cautious of what's going to happen in UK after the election here. So there, I think it's something that we have to continue to follow and have a very close look at.
Okay, and then a question on the orders, the pending order of New Karolinska and the others. How would you characterize these orders? Are they strategic, which sort of have a margin below your targets, or do you have a good profitability well in line with your targets?
If we talk about the strategic part first, I'm going to comment about the profitability level as well. Of course, there is a strategic move, so to speak, to land such an order, because it's the biggest project ever. It is the first PPP hospital and building project in Sweden. And I think it's very important for us. We also showed that it's possible for us to use the knowledge that we have in other business units, like the knowledge we have in UK. We are moving it in here and utilizing and together with the Swedish operation here. So absolutely, this is a very important order for us. The profitability, it's a reasonable right level that we should have both on the construction side and as a return on the investment that we can see and we expect to have in infrastructure development.
Okay, and then a follow-up. You were mentioning the bidding cost for NKS. I didn't have my calculator with me, but roughly 40 million in Sweden for this quarter, if I'm not correct. But you also have your UK operations and your ID operations included. And What's the ballpark on bidding costs in total? And should we expect a recovery when we see the financial close in Q2?
Yes. I mean, we have, as you said correctly, we have costs in 3 different business units, and upon financial close, we will have recovery in all 3 business units as well. All in all, you can say we have invested in our bidding cost in excess of 100. Otherwise, you can say, as an addition to Johan's comment on such a large project, that we are very cautious on profit recognition in the long projects. And this is a 6-year project, give or take, that the risk will not appear day one. They will appear sort of 3-4 years into the project. So we will have a cautious profit recognition.
Which we always do in all big projects. Nothing special with this one.
No.
Okay. Maybe just one final question then on Finland, both on construction and residential. We see some different trends there. In construction, you're running in losses again, and in residential, you're recovered back to very strong profits. What's your comment on that?
My comment, if you talk about the losses in the first quarter, is a seasonable level. It's not that you should expect that the full year will be on the in negative territory. And the residential market, we'll look at that as a very positive market now. It was a little bit slower than the Norwegian and the Swedish market to recover. But now it's definitely a market where we see opportunities to start more projects in. And we are all both building for our own residential development or organization, but also for external investors.
And the residential in Finland, have you recovered some of your write-downs?
It's a little bit, the margin in the first quarter is on the generous side, because some of the projects that were written down during last year that we sold this year has sort of come out a little bit better.
Can you say something on the magnitude?
No.
Okay.
No, we only comment when they're sort of a certain size, and it's not in that ballpark.
Okay, thank you.
Thank you, Niklas. Peter?
Yeah, Peter Trzygarski at Danske. On your tender margins, can you perhaps say, is there any difference compared to how it looked last year?
Well, if we go back, a little bit more than 1 year, if we go back to 2 years, we have said that it was a little bit, it's more pressure on the prices today compared to if you go back. There is no major difference if you compare the situation today to how it looked like in 2009. It's more competition, many projects to bid for, especially on the infrastructure side. But there is a lot of companies out there.
Okay. Are you seeing still like some input prices has increased? Do you see any signs that you might get some, that the price pressure might squeeze your margins a bit?
You mean from commodities or from materials?
Yeah.
We see some signs there, and that is definitely something that we are following very closely.
And when you look at salary increases?
I can't really see that there is a pressure on the salary side.
Okay.
The salary side is much more predictable because, of course, when we bid, we assume a certain salary increase. And you can say the contracts being signed are sort of at the levels that we estimated.
Okay, thank you.
Thank you. Do we have any more questions? Yes, here. Marcus.
Thank you, Marcus Demi from ABG. We'd still like to come back to the winter discussion that we had here. You quantified the top line effect here, and also taking that into account in your full year guidance on the top line as well. But is there some chance that you might get back something in Q2 and Q3, which you lost now in the first quarter? Will this essentially mean that the projects will be postponed into 2011? In terms
well, we have taken that into the consideration when we give you the guidance of somewhat more than 5% of the thing that the part of the winter impact that can be recovered.
Yeah, exactly. And in terms of the margin impact about the winter, could you perhaps shed some light on that?
The operating income is impacted by around 100 million. Swedish in total for as a negative winter impact.
You can say we calculated that or when we asked all our people that the 4% is around 1.2 billion Swedish crowns of sort of production that never took place. And with an average gross margin of around 8.5 or so, it is around approximately 100 million. You can't get much closer than that.
Perfect. Then one additional small question here on the order intake for USA Building. Seems to be, in my view, slightly on the low side. Is there something special that happened in the first quarter, or do you expect to have better
No,
later?
I think it's a sign of the tough market, and I should say maybe the weak market on the building side in US. 2009 has been more positive than we expected, and this is a little bit, what we predicted so far that we can see now as an impact in order intake for USA Building.
Great, thank you.
Thank you. Any more questions here from Stockholm? Okay, then we go and see if we have any questions from our telephone conference.
If you have a question, please press 01. The first question comes from the line of Mr. Mark Hake from Merrill Lynch, London. Please go ahead with your question, sir.
Good morning, gentlemen. I've actually got 3 questions. Firstly, I just want to get a feel for the EBIT margin progress. I take your point about new workload being one, but should we expect, because of this lag between winning work and actually building it, that you might see further margin pressure on the construction business in the second and third quarter? My second question is on the UK. You've mentioned 2 or 3 times you are cautious on the UK outlook. Can you give me a feel for what kind of downside risk you see to the UK market? And then finally, what evidence have you got of infrastructure work in the US coming through more meaningfully?
Yeah, I'll leave the first question to Hans because I couldn't really hear what you said. I'm going to comment to 2 others.
I guess, Mark, you are fishing for the EBIT margin for the year, which I won't give you. But you can say, well, of course, we have had for quite a while this margin pressure. So the first quarter this year is no different than the better part of last year. And of course, in some markets, the pressure is coming through quicker, like in the Nordic markets where we have a shorter duration, while in USA Civil, they are sort of protected in much longer because, all the job that we do essentially this year, we already had in the bag last year. So, the first quarter is impacted by the seasonal impact. We historically, we have carried out around 22% of the work in Q1, which means always an under-absorption of overhead, and also some high-margin activities are shut down, like asphalt and so on. And this year, it is particularly sort of impacting with the 22% might be only 20% or so. So the first quarter doesn't give any particular lead to what the full year will be.
And if I should continue to comment on your question regarding UK and US. UK, as you know, I think there is a need to cut the public spendings. Where it will take place, that's absolutely too early for us to say. I think that maybe you are even closer to that. But it's something that we have to observe and follow. If it will be a cut in the and they will stop the PPP program, that is really hard to say. Depends on how they look at the program there, because on one hand you can say that they are not really using they are using the private money instead. So maybe it could be one way to find the infrastructure projects. But this is definitely something that we have to follow very closely and to see how it turns out.
Mm-hmm.
I can't comment anymore regarding it more than that. It's something that we look on very closely. In US, we see a healthy pipeline of projects, a lot of projects in New York. And as you know, we are one of the largest civil contractors in New York. So the project flow, so to speak, in that market is very important for us. Many projects coming there, both bridges, highways, tunnels, and so on. But of course, everybody wants to take part of that party. So there is a lot of bidders out there as well. As you remember, I also said that we are on the way to build up our presence on the West Coast. We have operations which we have had quite a long time, many years, in the LA area, and we are building that one up. We have also opened up an office in Phoenix. We have established an operation in San Francisco in the Bay Area. We have increased our efforts up in the northwest corner in Seattle as well. So we are on the way to build up a more presence on the infrastructure side on the West Coast. And we can see that there is a lot of opportunities there as well, big projects coming to the market. But same situation as on the East Coast, there is a lot of competitors as well.
Okay, thank you very much.
Thank you, Mark. Do we have any more people on the telephone conference?
There appear to be no further questions.
Okay, thank you. And from the web, no further questions? Then I would like to thank you for the presentation, and for you that are here in Stockholm, you are welcome to join us with a lunch.